Hey guys, today I want to show you a few steps of how you can begin building a dividend growth portfolio. I actually did this a few years ago, so I'm going to show you some of the steps that I took back then to start building my own. All right, let's get to it.
Let's have some fun. When you are starting to build a dividend growth portfolio, you want to find companies, stocks that have a history of paying out more dividends every single year. And what's a dividend? A dividend is just a share of profits that a company pays you for being a shareholder. If you can believe that or not, it's pretty amazing. Let's look at three examples here. We're going to start off with Broadcom Inc. The ticker is AVGO, big semiconductor company. But basically I have a chart here of their dividends paid from 2010 to 2022. Now look, the first thing you want to see is an up-sloping chart, right? That means that they're paying more dividends every single year practically. There was a little bump in the road here in 2020, right? The pandemic. But as you can see, the company definitely is shareholder friendly, right? They are paying you to hold their shares. As of FactSet data right now, it looks like their indicated annual dividend is $16.40. Okay, that's a lot of dividend growth since whenever they started in 2010. But check this out. It's got a dividend yield right now of 3.1%. Their one-year dividend growth is just about 14%. Their five-year dividend growth is 302%. Pretty amazing, right? So that's the first step. Let's look at another example. This is Starbucks, which I own, and Home Depot, which I also own. But basically the story is the same. It's an easy to understand business, right? Starbucks, coffee, we all love it, we all need it. Look at the dividend growth from 2010 all the way to 2022. So you're talking about 18 cents paid in 2010 versus looks like the indicated annual dividend, is $2.12 in 2022. So that is a lot of growth, and you can see 1 year, 3 year, and 5 year dividend growth is very positive. And then the last one is Home Depot, one of the best dividend growth stocks out there, probably of all time. From 1987, split adjusted, the stock was paying a dividend of just under a penny, and now it's at $7.60 annually. So that is a lot of dividend growth. You want to find companies that have a history of paying higher and higher dividends.
So I'm using three examples here. We got Broadcom, we got Starbucks, we've got Home Depot, right? These are companies that tend to make more and more money every single year. They tend to pay out more and more dividends every single year. And that's the easy part about being a dividend investor, right? You literally just sit and you just ride along as the company pays you out year after year. So step one, find a company that has a history of paying more and more dividends every single year. Now let's go ahead and look at some charts and how this looks in reality whenever you start investing in dividend growth companies.
So here we are, we're looking at Broadcom, right? You've done your research, you're like, oh, I really like this stock. So here's what a normal stock chart looks like for AVGO. The stock price is a little elevated, $524 per share. But look, every quarter the company is paying you a dividend. And so the last dividend that they paid was $4.10 per share. You can see that here as well. This was in June of 2022. But the key is if you hold it over the long term, you're getting paid out, right? So $1.75 back in December of 2017, $2.65 in March of 2019, $3.25 in December of 2019. So again, you really start to see that this is one of those companies that wants to reward its shareholders, and that's how dividend growth investing works whenever you pick a great company. Now there's a couple of other stats that I like to pay attention to. I want to see companies with big free cash flow yield, right? And so you can see that with AVGO, it's very, very strong. And so that just means that companies with big free cash flow, they're probably going to be able to increase their dividend year after year. All right, let's do another example. Starbucks, we love that company. It's a great company. Let's just look back 10 years at the data, right? Look, all the dividends you just continue to collect as they're growing their dividend year after year. And look, this is with stocks going up, going down, going up, going down, but the dividend growth continues. That is the key for finding a great dividend growth stock for your portfolio. Last but not least, I want to look at my favorite dividend stock. You got Home Depot. The stock price is $319. But look, over the past 20 years, all of these D's, those are the dividends, right? And we went through some ugly times in the market, but the company was so resilient, continuing to pay its dividend, increasing it year after year. Look, again, you don't have to win on every single dividend stock, but you get a couple of these, you hold them over the long term, can really make a big difference in your portfolio.
Dividend growth, it is easy once you find great stocks, and that is the hard part. So I suggest you don't just pick one or two companies, pick a handful of companies that you really like, that you understand they have a history of paying more and more dividends every single year, and they have rising free cash flow year after year, which means they're probably going to be able to reward you as a shareholder. Lastly, remember, none of this is personalized advice of any kind. Just want to make you a better investor. Leave me a comment of some dividend growth stocks that you guys like. Also, remember to like and subscribe to our YouTube channel, and I will see you guys next time.